All right, so welcome back to another episode of Finding Value Stocks. The first thing I need y'all to do is hit the subscribe button so I can keep doing this and we can get more viewers and more comments. That's the key. So in this one, we're going to be talking about REITs. So those are real estate investment trusts. So if you want to own real estate and get passive income from real estate, this is the easiest way without having to actually physically own the real estate and manage it and deal with tenants or anything like that. You just own it like a stock, but the value is based on real estate and they pay you dividends. Now there's also some special ones that they own the mortgages and the loans on real estate, but all of these have to do with real estate. They pay out 90% of their profits in dividends, so that's why you're getting such a high dividend. And this is one of my favorite market sectors because of the passive income aspect and the real estate aspect. It's just been a classic way to make passive income for forever. So, a goal would be, okay, let's say you can own enough REITs that, you're making 9% dividends or so, 8%. Can you own enough REITs to pay your rent? So that way you pay rent, but then your stock holdings pay you enough dividend that you can buy more stock equal to your rent. So now, you're living for free basically, and you're investing what you would pay to live. So it's an awesome setup. That's the goal. So I'm going to show you how to analyze them, look at some figures of merit for REITs, and how to find value in the REIT sector. One thing that I don't mention while I'm recording this is that besides the key figures of merit we're looking at, something else you want to look at is zoom out on the stock price for as far as you can go, and make sure that it's flat or slightly increasing over time, because this will show you are they diluting shares, and also the whole point of a REIT is that your principal stays the same or grows a little bit, and you're getting the dividends. So you just want to make sure you're not getting one that's slowly going down towards zero. You want them to track flat or up. That's just kind of a common thing that I like to see in them. So let me show you the spreadsheet and I'll show you what I found. I think you'll like the stock, and I'm going to analyze it more and give you guys a few more updates about it.
Alright, so welcome back to another episode of Finding Value Stocks. I'm looking at REITs. This is my spreadsheet for analyzing some key metrics, some figures of merit for REIT stocks. So these are going to tell you how undervalued or overvalued the stock is, so that once you find one that looks like it's a good value, you can go in and analyze it more. So let's just look at the figures of merit we're going to look at. The first one is price to book value. So this is the share price divided by the basically the underlying asset value per share of the stock. This is the next one we're going to look at is dividend yield. So that's just the amount of dividends it pays divided by the share price. The next one is FFO coverage ratio. So FFO is funds from operations, and the coverage ratio is the ratio between the funds from operations per share and the dividends paid per share. So basically, how much of their free cash are they paying out in dividends? If they're paying more than 100%, then they're basically going into debt or paying more than they're making each quarter. The next one we're going to look at is share dilution. So the problem with REITs is because they pay out so much of their earnings in dividends, they don't keep a lot in order to grow the business and buy more property or mortgages or loans. And so in order to raise capital, some of them will issue more shares, which means your share is now worth less. So that's something you want to watch out for, because that's one sneaky way you can lose money by owning these stocks. And then another one that's just relevant for right now is we're going to look at the price versus January 2020. So we can see, has it recovered since the virus took over the world. So we looked at 5 different REITs. So we've got them all listed right here, and these are just the metrics for the latest quarter because things are changing so fast. Because in the last year or two, these companies have kind of gotten turned on their head. But we're trying to find which ones are still undervalued. And so we've got our value metrics over here. So we're looking for a price to book value that's 95% or below. We're looking for a dividend yield above 7.5%. We're looking for an FFO coverage ratio over 105%. So they're making more than they're paying out for dividends. We want a share dilution of less than 1%, so they're not diluting our shares and taking money from us that way. And we want a price versus January 2020 of under 90%. So I went ahead and filled in all these numbers for all these companies, and over here I've got where I got these numbers from. So for the price to book value, you can go to Yahoo Finance and look on their the key statistics page for the stock. For the dividend yield, you can just go on the main page of Yahoo Finance. For the FFO coverage ratio, I got the FFO from Seeking Alpha. They have an earnings page for each stock. Share dilution I got from this stock analysis website, and then the price versus 2020 I got from Google Finance. So I'll just show you these real quick. So this is the FFO per share per quarter. So then you can divide that by the dividend to get the FFO coverage ratio. That's something we'll talk about in a minute. And then this is the share change number. So you fill this in, and then I've got just some conditional formatting showing us so we can easily see which companies are the best. STARWOOD, we have an issue. Price to book value is 150%. Dividend yield is under our target. FFO coverage ratio is only 104%. So I mean that's probably acceptable, but you know, these are the metrics we set. Share dilution is 1%, so that's good. And then price versus 2020 is 104%. So they've already recovered, and their price to book value is pretty high. So we're gonna knock them out as a good value. Maybe they're gonna continue to grow, but they don't look like a good value from the numbers. CHIMERA is looking pretty good, except this share dilution is a little worrying. So these guys are still in the running, but we need to figure out what's happening with the share dilution, and are they going to continue to do that going into the future, or is this just something they did in 2020 and 2021 to raise some cash? But that's a pretty high number. CTO is a kind of a special case because they just became a REIT. They used to be a normal corporation, so we got to look more into that, but they have a pretty high share dilution as well. Blackstone is just not looking like a good value, so they got a price to book value of 120%. Dividend yield is good, but they're paying out more than they're earning in dividends, so that's kind of a risk to the dividend. So if they do this for too long, they'll have to cut the dividend, or do what they're doing here, share dilution to raise money. So you're losing more in share dilution than you're getting paid in dividends, so that's an issue. But their price hasn't recovered since 2020. So the one that looks like the best value so far is MFA and maybe CHIMERA, but we'll have to look into that share dilution. So we're going to look more into MFA financial. So looking more into them, I did a more advanced spreadsheet. I'm not going to go through all of these numbers, but just to show all the stuff I went back and looked at, I looked at the share count over time. An interesting thing is they're actually doing a buyback. So they said they're going to do a buyback for $250 million. That's going to run through 2022, and their market cap is only $2 billion. So they're going to be buying back, more than 10% of their market cap. And looking at their share count, it looks like they've only bought back, about around 2.25% to 2.5% of the shares. So they're not even halfway done with this buyback plan. So that's another way to make money in the stock besides it being undervalued versus the book value. So this was my choice for a good value REIT. I'm going to listen to their earnings call and take notes, and I'll let you guys know what I hear in the earnings call. But so far this one's looking like a great value. So that's my analysis of REITs. I'll post more once I research more about this company, but it's looking good. I found this news article about their buyback program. So it said that the stock jumped 8.9%. This was back in November 2020. So, but like I said, they haven't finished completing the buyback. So that means they're still going to have to be buying back these shares. So November 2020. Okay. Yep, so this was the price appreciation just from them announcing that, but they're not done buying back, so that's good news for us. So I'll see you in the next video. Thanks for watching. Make sure you comment, subscribe, tell your friends about these. You know, we want to grow this channel so that we can get more comments and people. You know, I'm going to put this out there, but I want you guys to criticize my analysis, tell me where I'm right, tell me where I'm wrong, because that's how we can find good investments and make more money. So,
all right, so that was why I chose MFA Financial. I'm gonna continue researching them. So far, everything I've seen I like compared to the other ones. So I've been buying little bits whenever the price is low, but I'm gonna do even more research before I continue to buy a lot more. So I'll let you guys know what I find. Subscribe. I'll see you on the next one.